Hello, and today I'm going to be doing Cashflow Quadrant for Robert Kiyosaki. It's like saving $30,000 without saving. I previously wrote about why the government does not give a tax advantage for saving money. Well, I doubt the banks will ever ask the government to do so because your savings are their liability. The United States has a low savings rate simply because banks do not want your money or need your savings to do well. So this example in a way of playing bank and increasing your savings without a great deal of effort. The cash flow from this $30,000 is reflected as follows. So what's here is the assets. I think that's yours. $30,000 goes to the income. Here. There are several interesting things about this diagram. Number one, I determined the interest rate for my $30,000. Often it's 10% interest. Most banks pay you less than 5% on your savings today. So even if I did use my own $10,000 as a down payment, which I try not to do, the interest on it is often better than the bank would pay me. It's like creating $20,000, $30,000 less than $10,000 down payment that didn't exist before. Just like the bank creates an asset and then charges interest on it. Number three, this $20,000 was created tax-free. For the average person in the E quadrant, it would take nearly $40,000 of wages to be able to set aside $20,000. Income earned as an employee is a 50-50 proposition, with the government taking its 50% through withholding tax before you ever see it. All property taxes, maintenance, and management fees are now the responsibility of the buyer because I sold the property. And there's more. Many creative things can be done on the B&I side to create money from nothing, just like playing the role of the bank. A transaction like this may take a week or to a month to put together. The question is, how long would it take for people to earn an additional $40,000 so they can save $20,000 after taxes and other expenses? The income stream is sheltered. In Rich Dad Poor Dad, I briefly cover why the rich use corporations. Number one, asset protection. If you are rich, people tend to want to take what you have through litigation. But the rich often don't own anything in their own names. Their assets are held in trust and corporations to protect them. Income protection. By passing the income stream from assets through your own corporation, much of the income that is normally taken from you by the government through taxes can be sheltered. The harsh reality is that for employees, the sequence goes like this. It says earn, taxed, spend. As an employee, your earnings are taxed and taken through withholding taxes even before you get your paycheck. So if an employee is paid $30,000 per year, by the time the government gets through with it, it's down to $15,000. With this $15,000, you must then pay your mortgage and all your daily expenses. If you pass your income stream through a corporate entity first, this is what the pattern would look like. So here, earn, spend, taxed. By passing the income stream from the $30,000 through a corporation, you can expense much of the earnings before the government gets their hands on it. If you own a corporation, you make the rules, as long as it conforms to the tax code. For example, if you make the rules, you can write into the bylaws of your company that childcare is part of your employment package. The company may pay $400 per month for childcare out of pre-tax dollars. If you pay for it with after-tax dollars, you have to effectively earn almost $800 to pay for the same childcare. This list is long and requirements are specific as to what an owner of a corporation can be written off with can write off that an employee cannot. Certain travel expenses can be written off with pre-tax dollars as long as you can document that you conducted business, such as a board meeting on the trip. Just make sure you follow the rules. Even retirement plans are different for owners and employees. In many instances, having said all of this, I want to stress that you must follow the required regulations to make these expenses deductible. I believe in taking advantage of the legal deductions allowed by the tax code, but I do not recommend breaking the law. Again, the key to taking advantage of some of these provisions is which quadrant you earn your income from. If all of your income is generated as an employee from a company that you don't own or control, there's little income or asset protection available to you. That is why I recommend that, if you're an employee, keep your job, but begin to spend time in the B or I quadrants. Your road to faster freedom is through those two quadrants. To feel more financially secure, the secret is to operate in more than one quadrant. Okay, I hope you liked that. If you did, please like and subscribe. Bye!